and I hope you all are also really prepared for today's class. So let me share my screen. Let me share my screen. So I'll quickly do a quick recap of what we treated last week. And if you have any question, please feel free to throw into the chat box and ask. Whether you almost or come into the chat box and ask. So as you know, we are talking about principles of accounting one, and if you remember vividly, that we talked about bookkeeping. Please, anytime you don't hear me, please just let me know so I can quickly adjust one or two things on my system. So if you don't hear me, or you can just send a chat, let me even open the chat box down so that I can see any message that comes in. So we talked about bookkeeping. We talked about recording and classifying of bookkeeping. That's writing every transaction, which we told you that any person, anybody who's able to read and write should be able to do bookkeeping. So bookkeeping is just the first stage in accounting. Then we now advance further, talk about accounting itself. So that's just the advance of bookkeeping. So when bookkeeping stops at recording and maybe classifying, accounting progresses to move into creating, summarizing, communicating, interpreting, so that you can make informed decisions, you can make business decisions when you see those accounts, your financial statements. And we told you about the differences. What are the differences between bookkeeping and accounting? If you still remember, we said, if you still remember, we said is the act of bookkeeping is just recording and classifying, while accounting is also classifying, summarizing, analyzing, interpreting also too. So also bookkeeping also involve it's so simple. Why accounting is somehow complex. Bookkeeping you can learn it within how many minutes, how many days. But why accounting you have to go to school to learn. If you want to become a professional accountant too, there's also those lectures you receive to be a professional accountant. So we talked about that, and we talked about extensively on about users of accounting. Almost everybody is a stakeholder. Everybody is a user of accounting. The owner of a business makes use of those financial statements. They need information on it. The employee, the manager, the shareholders, when it comes to all those limited liability company or PLC, those big companies, they use it, they use those financial statements. So they make use of the government, creditors, suppliers, customer, competitors, the public, every person, everybody needs it. And we talked about the history of accounting, how it started when Lucas Pacioli, who developed the double entry system for us, when he did a book which is called Summa de Arithmetica. So little by little, accounting was evolving, was advancing. When we had those industrial revolution, when everything started evolving, we have industries. We moved from handmade things. We moved from just ordinary just goat and sheep, livestock, accounting, counting livestock and everything. Moving into industrial revolution, where we have all those big like Morgan Freeman, Anagaraga, and everything. When it comes to America, we have this revolution, industrial revolution at that time. So account has to evolve also at that same time too. So when we start having accounting bodies, professional accounting bodies, aligning things so that aligning accounting systems, align so that it will do the same, ensuring that there's uniformity, creating a body to ensure to promote accounts and the like. So from there to the 20th century, where start having the SEC, Security and Exchange Commission, even we have it in Nigeria to start looking at the financial statements of companies to ensure that the conformity in the accounting system, and which further created gap. When we talk about gap, generally accepted accounting principles. So that means the account of every company from one country to the other must do the same thing. So these are the gaps they follow. When we now come to this modern era we have now, when it comes to this era of intelligence, artificial intelligence, We talk about we talk about accounting software that make things now somehow easy to some extent for us to be able to compute accounting. So this is now the era we have now. So as you can see too, by the next 10 years, 20 years, again, you see an advancement again. You see AI doing all these things. So it's evolving, it's developing and everything. And we told you the importance of why do you need to keep those accounts? Why do you need to record? Why do you need to record? And I told you that it's not just limited only to just recording your what is your business owner, even as an employee, to is not for any salary. Why do you need to record to know what how you just know how you spend your money? You need to do recording, how much you're spending on transport, your food, your feeding, how much you're spending on this and that, on luxuries and everything. So so that you're able to adjust, so that you won't just get stuck, so that you won't run into deficit. So users of account importance is just for profitability purpose, to make decisions, to plan, to prevent fraud, to monitor the progress of the organization for tax assessment and everything that we talked about. And then we move straight to the accounting equation itself. That you should know this, that assets, this is the accounting equation. We have asset, capital, and liability. All your assets, you must get it either from your own purse, that's from your own personal money, or you borrow money from a friend or colleague or bank and everything. Everything together makes your asset. So asset equals your capital. Your capital is your money you provided, you as the owner of the business, the money you have that you invested in the business, plus liability, which is the amount you borrowed from any external person just to use to invest in that business. So everything together comprise your asset. So this is the accounting equation that we should know. So we talk about the role of accountant. So as an accountant, these are their roles, trying to be fast so that we're able to eat because time has really gone fast spent. Some principles of accounting we talked about, the gap too, are all those things that um, that serve as a guideline to prepare financial statements, just to ensure there's consistency, there's transparency, there's comparability in financial statements. So if I bring the account of the GT Bank, I can compare it with a Stanbic IBTC bank. So when it comes to the same industry, for different companies, I should be able to come, because there is a, 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 a format, there is a way you need to prepare in the same industry. But the same format we use in a banking industry will be different from a manufacturing industry. They have different ways. So these are things that guide them on how to ensure that there's uniformity, there's consistency in the account preparation. So we talked about all those gaps too, all those things, all those concepts and conventions that guide the accounting financial statements, how to prepare financial statements. We talked about those things. So we talk about the accrual principles and cash principles. I told you that cash principle, accrual principle, these is the type of accounting concept that companies use, they adopt, while cash principle is used by government. So when it comes to cash, it means revenue is only recorded only when cash is received. Only when cash is received, that is when revenue is recorded. Only when cash is received, not more, no less. So when the cash is not received, we don't record it at all. So I know I have an assignment that I gave. So we're going to be looking at it also this morning when it comes to this government and everything. Let's know how they plan their budget and everything. What is the revenue? What is the capital in their budget? So we have accrual too, which company adopts. So that is revenue is recorded when it is earned, not when cash is received. In as much that you supply, if you are a producer of something and you supply your customer and the person has not, your customer has not paid you, you can record it that it's a revenue. It's already, you've already incurred it. So write it as a revenue for yourself, even though the money has not come in. Just like in your balance sheet, there will be another place there with writing debtor. That means somebody who's owing you receivables, that you still have to collect this money from this social person and this social person. The same thing too. Also, expenses are recognized when they are expenses are recorded when incurred, not when cash is paid. So those who use postpaid or estimated bill, If you are using estimated meter in your house, that's what we call accrual expenses. That means you've incurred it, but at the end of the month, you pay. At the end of the month, you now pay. So when you incur the expenses, but you've not yet paid, so that is revenue accrual when it comes to accrual. So these are ones adopted by companies. Then we have the prudent principles. So I guess you must have also look through it. That means you don't need to overstate profit and you need to be prudent in things you do. You don't need to overstate your profit and you have to create room for in case of any loss, in case of something happens, create room for things if there could be anything that might happen. To create room for that. Consistency means that you have to continue the same principle you're following, continue to follow it. Do not change from one principle and the following year into another principle. It affects, you won't be able to compare everything together. Materiality talks about it all. If that is relative, what is material to you might not be material to another company. It depends on the size of the company that you're talking about. About the activity going concern, the matching. So the expenses for that year must match with the revenue for that same year. Expenses for that product must match with the revenue for that same product. You don't bring some up another product to match another revenue product or another revenue. It has to be the same. So you match it together on everything. So some money measurement, business entity periodical. So we thought that if every year account statement, financial statement is prepared for a period of 12 months. It can be from January to December, it can be from June to July, it can be. So it just has to be for a period of 12 months. So you have that. So we talked about the principles of accounting, principle of double entry. So which is now going in depth into the accounting itself. We told you that double entry system. So that there will be for every debit entry, in as much there is a giver, there will always be a receiver. In as much there is a giver, somebody is giving you something, that means somebody will be receiving. So that's what accounting principle is. So when something is going in, coming out, is going in somewhere else again. So debit the receiver, as we said, and credit the giver. So anytime the receiver is receiving something, you debit it, and when it's being given out, you credit it. The golden rule: all transactions must be recorded in two accounts. We spoke extensively about accounts. You must first of all not recognize the account. All transactions must be recorded into accounts. One account is debited and another account is credited. In accounting, there must be two. You must have two accounts. If there's only one and you can't find the second one, then it's very easy for you to be able to trace that there's something wrong. There's something wrong. This is going out from a purse, is going somewhere either to purchase something or going to another account, but it is not going the right place it's supposed to go, it's going somewhere else, then something is wrong somewhere. So you're able to, it might be because of error, it might be because of fraud, it might be anything. So it's now left for you as someone who now have idea of account now, to now able to trace it, to detect it, and to correct it and everything. So for every debit entry in one account, there must be a corresponding credit entry in another account and vice versa. So as I said, these are the steps you need to follow. Every transaction you make, every transaction between now, January 1st to up to now, if you start recording all the transactions you've made, it will have resulted into almost thousands of transactions by now. So in accounting, so when it comes to business, they record every single transaction in account. You record every single transaction. That is the beauty of the account. You must not mix anyone. Every single transaction in the account. So these are the processes, the stages. When you see a transaction, either the money is transferred to a customer to buy goods, identify the two accounts involved in those transactions, in that transaction. Identify the two accounts. When you get the two accounts, either it is cash and sales, you identify the two accounts. Then determine the account that gives value and the one that receives value. So which one is giving value? So that which one is going out. So which one is reducing in value. It's taking part of its own value, now trying to increase some another value. So just know that from those two accounts you've identified. So if you discover that, then the next stage is just debit the one, just credit the one that is giving out, put on the credit side, and debit the one that is receiving. So that's just how it is, which we also can say debit any receipt and credit any payment. So always write this somewhere. If you can start recording it, if you can write it somewhere. Oh, my voice is breaking. Let me try and adjust my my I really have a little bit of network issues here. So I'm trying to make sure that I really don't have network issue here. So I'll try as much as possible. So the connection is unstable. Oh, oh, pardon me. Let me adjust my to get a good reception. So I hope I hope it's better a little bit now. I hope it's better a little bit now. So as I said, so these processes, please follow it. Then we talk about transactions. We've already talked about transactions that every we already know what transaction is. Transfer of value from one person to another. Everything we do, as even you enter bus from one place, from your house to office or to anywhere, going to market, buying something, is already a transaction. So the transaction is either be in cash or on credit. So, and when you talk about cash, you open a cash book. When it's about credit, then you open a sales journal or purchase journal, either return inward, return outward, or thereabout. So, we talk about also source of document. How can you source it? How can you can't have everything off the top of your head? So there must have been some. So they get your receipt, your invoice, your purchase order, the bank statement shows it, your debit and credit notes shows check also shows the pay slip when you collect money shows it, and your voucher. Companies when they use voucher shows all those transactions that occur. Shows those transactions that occur. So I will talk about those accounts. Personal accounts, we have personal accounts and impersonal accounts. So, but now to go further, personal account, we'll be talking about debtor and creditor. So when we're talking about personal account, we're talking about it deals with person, it deals with entity, it deals with firm. So debtor, creditor. So when you are owing or you are being owed, so you open that, you already you take that account, you get off the critical account, so put it in there. Why the impersonal account, which is nominal and real. The real will say that the asset, motor vehicle, furniture, the assets, your cash, your stock, these are assets. Why the nominal are the expenses, your sales, your wages, all of that ones, rent, salary, all those ones are the the impersonal, rather the nominal, rather. So we did some classwork. We did some classwork that time, and then we moved to capital and revenue items. We told you that when it comes to capital items, even with the word capital, that is something huge, something big. So it starts with those long-term investments or long-term assets that is used in generating even income, that is used to generate income. So, for example, a company that has an office, you got the office, you want to use that office to also be generating income because you need to have an office for your goods to sell your goods and everything. Your car, motor vehicle, maybe you're going for marketing and everything, just so that income can come into your light, your generator also, so that there will be light, so that your processes, your work can go on smoothly and everything. So acquisition of land, building, machinery, that's for companies and everything. And we talk about the capital income for government. When we talk about building of schools, road, bridges, train, rail, all those ones are capital expenditure. Why the revenue expenditure or the revenue expenditure when we're talking about my salary or the day-to-day expenses. When we start talking about repairs and these repairs, beautification, the day-to-day expenses, salary, wages, paying of all these rent or thereabout, these are revenue expenditure. So they are also we also have revenue items too. We also have revenue, that is revenue item. So revenue income too can be either revenue can be both income and expenditure. So book of original entry, we spoke about that. That's where the first transaction took place. When you start recording, that's where it takes place. Then which are the sales journal, purchase journal, cash book, purchase general ledger. So from here, it's been transferred. It's been transferred. Okay, from journal, you transfer it to ledger. Transfer it to ledger. So from there, these are the processes we follow. So those ledger, personal, general, private, and the like, and everything. So we did past work regarding that also. Then we talk about trial balance. So from that ledger, it goes straight to trial balance. So trial balance is a statement that lists the balances of all ledger accounts at a specific point in time. So we talk, I don't want to start discussing much because we already, so trial balance shows that all the transactions it has to balance. So your debit side, your credit side must have the same figure to balance. That's why from the word balance, that's to balance. It does not balance, then there's something wrong somewhere. So it's when you now know that it's balance from your trial balance, balance, then you now start to paying the main financial statement, which is the trading, profit and loss account, and balance sheet, the cash flow, and the like. Find error to the main account. So find error to the main account. And I told you that you also know this, write this even at your left hand so that you know use it to you not forget. You write it at your left hand so that you will not forget. You said assets we always be at the debit side. Any asset we always see credit side. Capital or equity, credit side. Sales and income, credit side. Notice it's all about that. And errors that will not affect our balance. We talked about it that no matter what happens, you will not even know that it affects our balance. You won't even know. And what are the errors? Error of original entry, error of omission. So please go ahead and read it to understand it. We discussed that last week. Error of commission, error of principle. Talked about our compensating, completing, and duplicating error. So we talked about those. And these ones are the errors that will affect trial balance. This one is obvious. But when you just posted it in one account, you didn't post it in another account. That's one-sided omission. Surely the balance is not, the trial balance is not balanced. So you overly see, or maybe when you miscalculate, when you are calculating the figures from one to the end, and you mistakenly did one, you mistakenly omitted a figure, so it will affect your trial balance. It will affect your trial balance. So and the like and everything and on and on. So and this year we now go into bank reconciliation statement. In our next class, our next lecture, bank reconciliation statement. Bank reconciliation statement. So it is a statement that is prepared by an account holder for the purpose of finding differences between your cash book and bank statement balance. We'll give you an example. So from what we've been discussing since last week up to this moment, we're talking about even this cash book, because sometimes you always have idea of what you spent, what you're spending. You have idea of how much you have in your account. Thank God for the app we have now the phone app, so you can easily detect what happens. So assuming there has been no those bank app or the online banking or thereabout. So let's just assume there's no online banking. So you go thinking that I still have my account. Because the only time you can get your bank statement is either you go to the bank, they print out your bank statement, or maybe at the end of the month, since you've given them instructions to always send you a bank statement, you're able to reconcile. When you now get your bank statement, discover that I'm supposed to get this total amount, but I'm not getting this total amount. What happened? So you now start comparing. So that's what we call reconciliation.
I think we've lost him. Please be patient while we try to reconnect him back. Thank you.
Hello, can you hear me?
Yes, I can hear you. I think we lost you for a bit.
Oh, sorry, because I discovered that too. It was just rolling, discovered that. So I really don't know where. Okay, I guess you see, add me to the stage of bank reconciliation statement. Okay, good. So Richard says you can hear me. All right, thank you. So let me repeat again from the bank reconciliation statement where I stopped, because I actually expanded my screen, so I don't know what's going on from the background. So bank reconciliation statement, we said, as I said, just you reconciling your account, your cash book, what you have idea, maybe even in your brain that you have
Sorry,
that
Mr.
the
Sam.
amount.
We are you
Okay.
sharing your screen at the moment?
Oh, I am sharing. Okay.
We can't see your screen.
All right. Thank you. Since I guess I was logged out earlier before, so I need to reshare again.
All right,
Uh,
no problem.
yes. So I guess you can see my screen now.
Okay. Yes, I can see your screen now.
All right. Thank you. So um, okay. All right. All right. So reconciling the bank statement when you go. So I said just close your eyes on your bank app that you have. Let's assume you don't have bank app or any online banking. So this is where bank costs, because of the app that we have now, it's easier for you to quickly get any discrepancy. So it will solve it. Then you know, the, the, for the uh, 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 technology now advanced now that you can have your bank app from your phone, make transfer from your phone and everything. So make use of check. We make use of check those days. So I guess some of our students, yeah, I guess some of them must have seen check before. I want to believe none of them none has not ever seen check before. That always been just transfer from phone. So they make use of check, even though check is still out these days. So reconciling your bank statement, because the amount you have in your bank as that a given time is different from what you have based on your own record, based on your own cash book, based on your own record. You now start thinking, What makes the difference? What causes the difference? What is the reason? Why are we having those differences? So, and these are the reasons for the disagreement between your cash book and your bank statement. These are the disagreements. What will make it not to disagree? Because if you're in your mind, you're having, I know I have 50,000 naira, and you now from your bank statement, you discover that you have.
I think we lost him again due to network. So let's see how. Let's just wait a few minutes for him to reconnect back.
That's what we call check in a simple layman language. So, unpresented checks. So these are checks released or issued out, but which are yet to be presented to the bank for collection. That is to say that someone gives you a check, or okay, someone you give someone a check. If you are making use of a check, so someone you give someone a check, and to you, you've already given out that check. Let's say a check of 10,000 naira. You've already given it out, and in your own account, in your own cash book, you are going to write it down that this check has been issued out already. This check has been issued. So it has been issued out already. So you remove it from your own cash book. That will have been removed from your own cash book. But the person that you gave the check is here to take it to the bank for collection. At the end of the month, from your own cash book, it will be showing that you paid this person this amount, 10,000 naira. But your bank statement, because this person is yet to take it to the bank is yet to remove that 10,000 naira, it should still be showing in that your account. It should still be showing in that your account. So that's unpresented check. That is the check that you issued to someone, to a customer, or to a friend, but yet to be presented to the bank for payment. That means the bank is yet to deduct that money from your own account and credited it to that customer's account or your friend's account or the person who gives that check to. So the payee is yet to, the bank is yet to what? To deduct it from your account. So that's what unpresented check is. And what all this that, so the summer check too. So when you have the summer check, that same check, let's assume the person or the customer now takes you to the bank. The bank now say, oh, you can see there are some errors, there are some things that occur. Because of that, they will dishonor that check. So, and these are checks lodged or deposited into a bank, but were rejected by the bank. The bank rejected those checks. The bank rejected the check. And what can be the reason for rejecting the check? Your signature, the signature when you open the account, there is a signature you put down. If it's not the same with what you also sign on the check, the bank will dishonor it because the bank might think it's a forge. Somebody just took a leaf from your checkbook, signed, and wants to collect money without your knowledge. So if it does not align with what the bank has, the bank will dishonor that check. The bank will dishonor that check. Sometimes when you don't have sufficient funds in that account, sometimes for you to even chase away your creditor, what do? You start giving them check. You are going to go to the bank just to chase them away. And you know you don't have money in that bank, but you give them check. And your creditor now thinks, so he's going to get money. But you know, so insufficient funds will the check will be dishonored, will be dishonored. Alteration on the check when you start shading, when you make mistakes, you start shading and everything. No, it's not allowed. Yes, it's not allowed. Yes. And also, you must also write it in figure if they are not aligned. That's why the cashier, the person at the counter, must check all these things very well before he was honor that check or wrong amount. So these are the things that affect. These are the things that affect check that make check to be dishonored. So we have on credit check. So as we have unpresented check, which you issuing the check to someone, your customer, and the customer is yet to take it to the bank, get that money so that it will be deducted from your own bank account. The opposite is the uncredited check. That means the check that you now receive from your customer or thereabout. Check you receive from your customer, maybe a payment or something, but you are yet to take it to the bank. Or sometimes even you take it to the bank because when it comes to check takes 2 working days before it can be what it can reflect the amount can reflect in your account. So it takes 2 days. Check is not instantly. Unlike this online transfer, you make transfer instantly, you make transfer now, then instantly at the same moment, within seconds, the recipient receive the amount from. But when it comes to check, it takes processing. It takes 2 working days. In fact, if you don't even take the check to the bank by 12 o'clock, it can take 3 working days. So before it, especially most especially when it comes to check of different banks, different banks. So it takes longer period. So on credit check, these are checks which have been received and entered in cash. You've received it, but you are yet to enter it in cash in your cash book. Rather, you have received it and you have entered it in your cash book and lodged in the bank, but not been entered on the credit side of the customer's bank statement as at the day of reconciliation. As at the day of reconciliation. So, as I said, you have received it. In fact, you even taken the check to the bank. In fact, in your own account, in your own cash book, your recording, you've written it that you collected this total amount from Mr. James. He has paid you this amount. But the bank is yet to credit you. To credit you. So at that time you appraise the bank statement, you see those differences, then you're able to reconcile. Number 4, we all know this one, charges. Or every transaction you make, there will always be bank charges. You have that bank charge. Those bank charges you see it, and they start charging you. And you always complain about this too. So some of us, this bank is charging me so high. Let me just switch over to this bank. This bank is not charging, it's not charging us that much as this. So all these things you start doing just to make sure that your bank charge become less, so that So standing order. Standing order is when you make or you give an instruction to the bank to pay either monthly or yearly. You can ensure the bank that every month start paying just the total amount to this account. So it's a standing order that you made the order for them. It's an instruction given to the account holder by the account holder to the bank to make regular payments on his behalf. So instead of you going to the bank every time, every month to do those, just give a standing order. Just pay. So maybe it could be maybe you want to pay money to your parents. So just give them a standing order. Let them transfer 500,000 naira to them every month as their upkeep, or to your spouse for food upkeep every month. Start going there. So these are standing order. So from account holder to do that. Either for subscription or not subscription, they remove it.
Hello, everyone. I think the network has been quite challenging today. So let's give our trainer a little bit of time to reconnect back to the network. So let us give him a little bit of time. I'm sure he'll be back and everything will continue as smooth as it was. Well, Mr. Sam, can you hear us? Hello, Mr. Sam, are you there?
Yes, I can hear you now. Yes,
All right, you can
I can
proceed.
hear you now. Sorry, I'm so sorry for this network. I don't know what happened. It's so very terrible network this morning. And after the break, I'll try and relocate to another place so to get a correct network, better network. So let me share my screen again. Uh, so as I was saying, let me see if I'm still together. Are we still together?
Yes, we are still
Yes.
together. I can see your screen. Reason for disagreement.
Okay. Okay, all right. Thank you. So, um, standing order which I've said, just instruct your bank officer or your account officer, instruct the bank to always pay so amount to so account, either on monthly basis or yearly basis or thereabout, something like that. So it can be your subscription for a group of society, maybe you are thereabout, or maybe of a body you join and you are meant to pay subscription, just give the bank the standing that contribute that of you in receive discover that there is a difference between the bank statement here. There are sometimes dividends, transfer dividend to your account, and you don't have the record with you. So it's when you now get your bank statement, you're able to reconcile those things because the balance in your bank statement must be the same balance you have in your card group. Now that you know that your money is intact, everything is not that someone has come to take part of your money. So, so treatment of bank reconciliation statement. Treatment of bank reconciliation statement. So prepare a bank statement. Okay. Sorry, Richard. I think I saw someone raise his hand just pop out from
Yes,
my
sir,
screen.
it's me. It's Richard.
Okay. Okay. All right.
Okay, before we proceed, sir, I would like to get your idea about something about the discussion. The next slide, can you go back to the previous slide, sir?
Okay. Okay. All right. This.
Yes, I saw bank charges, and I would really like to know your position and your idea about bank charges. For instance, are we the customers supposed to be charged by bank?
Yes.
Recently, I saw something online that the owner of Zenith Bank, Igor, what's his name, Jim Ovia.
Okay. What? Okay. I'm talking about the movie. Yes, I'm listening. Hello, Richard. Are you there? Hello. Hope you can also hear me.
accountant.
Yes, went
Sorry,
off.
Richard, you're breaking. Okay, Richard, you're breaking. So I only heard you from what you said, Gemovia. Or am I the one breaking? But to talk about not to waste time, so I didn't, but at least I
Hello,
to
can
talk
you
about.
hear me, sir? Can
Okay,
you
I
hear
can hear
me?
you now. Yes, I can hear
Sorry,
you
it's my network that's morphing.
now. Okay.
So I was saying that recently I saw something online that Jimovia, what's his name, the owner of Zenith Bank, is being paid 70 something billion, and that money is from bank charges alone. And I was asking that as an accountant, what's your view about this? Do they need to be charging with the customer that much? At least there's a bank, telling bank that said they are not going to be doing all these charges again. What is, in your view, can the government do to implement bank to stop bank from charging with the customer? That's the question, sir.
Okay, so thank you. So to answer the question, one of the sources of where banks generate money is bank charge. Because there's no other one of the there are many ways also. Because sometimes when you pay money, you know the reason why we have banks is about depositing and money going out. Money going out means that you deposit all your money to them and they give to someone else who needs it to borrow it, collect interest from such person. So that's just how bank is and everything. And they now pay you a stipend, some more amount. Sometimes we don't even see, because we deposit money there, we don't even see anything at the end of the month or the year. Maybe there should be something like I put money there now. There should be some commission. There should be some interest that should have accrued to the money you have thereabout. So that's one source. Another source is bank charge. Every bank, anywhere, there will always be bank charge. They will have to charge you on that transaction because they're not doing it for you for free. There will be a there will be always be a charge for every bank transaction. Now the question is, how much should they now be charging? That's where the issue is. Because they are really charging so high that you even get so angry that for this little transaction, why are you charging this? In fact, it's even being regulated by government because every time you make a transaction of 10,000 and above, there's a 15 naira charge. Bam. Stamp duty, you will see it there. Stamp duty, you will charge you 50,000, 50 naira for every 10,000 naira charge. That one is now different. Then the transaction itself, some can be 25,000 naira, 25 naira. Some, after that charge that 25 naira, they charge another VAT on that 25 naira again. So they charge another charge on the charge. So, and it's regulated by government because when government needs some sources of income, these are things they do to make sure there's this charge and this charge and this charge and this charge and this charge. So it now depends on each company, each bank. Some bank can charge less, some bank can charge high. So it's not left for you to now look. So when say what government needs to even actually come in to ensure that too much charges need to be reduced. They don't charge so much. Reduce those charges because you have some amount, and at the end of the month, when you are doing your calculations and you discover that the old charges got the bank is even deducted from your money, it's even better for you to keep the money in your hand, in your house. Just get a PD box or something like that, or get one colo, put your money there. It's even better for you. If you go to ATM, another bank, you know that's another route CBN gives now. Every 20,000 naira, you go to any ATM now. You know how much you will charge? 500 naira. Go to any ATM in any eatery or shopping mall. I think that one is that much. Is it not 1,000 naira there, but that one is even more, charge more and everything. Then before, if you use your ATM card in another ATM bank, after the third transaction, what happens? They charge you 35 naira per transaction. These are charges. Who is regulated? CBN regulated that. So they follow those things. And that's where they are making billions of money, billions of naira in charges. You alone, if you know the transaction you make on a daily basis, from now till, or let's say from January to now, the transactions you make, the transfer you make, money you receive, times millions of people, those who have bank accounts, they still charge you for maintenance. maintaining your account. So all these things are not free. So obviously you have to pay. So every bank will collect charge because it's one of the sources of, and bank is there to make profit. No bank is an NGO or charity. So, but they just need to reduce the charges. That's just we are paying for the government. So if government have our mind at heart, we need to regulate it. CBN needs to regulate it. That's the monetary aspect of it, not the fiscal, the monetary aspect of it, to regulate all those things. And sometimes they do those things in order to stabilize the economy. To stabilize the economy. Sometimes they do it like that. So that's for bank charges. So we can't do without bank charges. If we don't open account, that's the only way you you can be free
Eh,
from bank charges. So I hope that
Hello,
is
sir.
clear. Yes, sir.
Yeah, yes, sir. Yes, sir. Can I say something?
All right.
Yeah, as you've rightly said, I think the government is complicit in this because they themselves they do charge us. But with what we've had, like me, I've not been privy to go to all these countries, but we've got people that went there, people that traveled to the Western world. They've always been saying that their money, they don't charge them outrageously. They don't even charge them according to them. That if they put a particular amount in the bank account, that's what they will meet the money even after 10 years, after 20 years. The money is intact. But in this country, it is not the case. So obviously the government is complicit because they are making maybe taxing us too much. And it's really affecting the population. It's affecting the masses. We the customer, we are the one bearing the brunt. So as you've said, it's true that even if you go to POS or ATM outlet, they will charge you on your own money. And it is really frustrating as a Nigeria. But as an accountant, I believe that though I'm not an accountant, there should be a solution to all this. And hopefully very soon we'll get a conclusive solution to it. Thank you so much, sir.
Thank you, sir. So hopefully you say we get the later, but welcome to Nigeria. This is how we see. And most especially when it comes to this present administration, like looking for money by all means, to generate income by all means. So they will look for any way, anyhow, to just generate income. So these are places, these are things they look at, VAT, everything. So we get there. So, so pray that we have a benevolent leader that have to look at all those things. Sometimes it's annoying, all those charges. It's very annoying sometimes. Very, very annoying. But we can't help it for now. Yeah, government. So treatment of bank translation. Preparation of bank translation statement starts with balance as per cash book. Start with it. Balance as per cash book. Then preparation of bank translation statement starting with balance as per bank statement. So that we have three ways you can prepare your bank translation statement. Either you start from cash book, you now work it back to get the balance in your bank statement. Or you start from bank statement, you work it back. It's just the opposite to your cash book. And the third one is adjustment of cash book and preparation of bank reconciliation statement. Adjustment of cash book and preparation of bank. So this third adjustment does not, we don't really use it. But the first two, especially the number one, the first one, from your cash book straight down to your bank statement. That's what we work we use. So here is it. So here is the format. Balance as at your cash book. So at the end of the month, if you are preparing an account at the end of the month, you want to know how much you have at the end of the month, or at the end of the year, or any at the end of the quarter or thereabout. First of all, what balance do I have in my cash book? Or what amount do I think I have? You write it. Then you now start working back. You now start working back. Add unpresented check. You know, unpresented check, I said that check that you gave to someone. You gave to someone 10,000 naira check. Toby, take, I'm giving you for your wedding gift. So go to the bank, go and cash it. In your own book, you've already removed 10,000 naira. So you can see You already removed 10,000 naira. But when you now got the bank statement, you discover that Toby is there to take the check to the bank. So what do? Since he's here to take it to the bank is here to remove it, and you remove it from your own card book, add it back. In as long Toby is here to receive it, add it back. That's why it says. Dividend to receive too. You bought shares, but you are yet to write. You don't know that there is a dividend because the dividend is paid to your bank. It's not paid as a cash. It's paid to your bank, and you don't know. You don't have idea, and you never even got a lot. Bank did not alert you of it. So we check the dividend to since you got the bank statement. You discover that ZYX company already gave me a dividend of this total amount. Add it to your cash book again because it was not there in the first instance. You had it there too. Credit transfer, as I said, miracle money. If you use the word, so you quickly know. So someone transfer money to you and you don't know who the person is until when you just got back statement, you discover that this person, a customer has paid me, or someone else has paid me this social amount. You do what? You add it back to your cash. So that's why I think add unprecedented check, add your dividend, add your credit transfer. You add it with the balance you have on with the cash book. You have that. So which one are you now going to the rest, which are uncredited check. Uncredited check. That is the check that you receive. As I said, you take it to the bank, but bank is here to credit you. As I said, it takes 2 working days for a bank to be honored, to receive a lot. So it will not reflect, even though you get the text message that a check has been paid, but it will not reflect on your balance until after 2 working days. So that's why I say uncredited. It's yet to be credited to you. Because it's yet to be credited to you, and you've already written it to your cash book that you've gotten this money from that person, because the person gave you a check and you take it to bank, thinking it will turn to money, except you collect the cash at the counter instantly. That one is the difference. Sometimes check is paid directly to the bank or something. Let's say you're collecting millions of naira, so they won't pay you as cash. Even these days, no bank wants to pay you that huge amount of cash because of the law. So they'll pay to your cash, to your bank. So you send the check, presented to the cashier, the person at the counter, and yet to be credited to your bank. But in your own cash book, you've written that I have received this total amount. What do? You remove it back. The bank charges, obviously, the only way you can know the bank charges, the government, the bank charges you if when you get the bank statement, you calculate all those small money that you calculate, you now say, whoa, wow, this total amount has been reduced, I've been charged from my account. You do what? You left it on your cash book also because that money has been taken out. The summer check also too. The summer check, the check that you left down to standing order, not standing order. You left it. That's it. So at the time you now do those that all those left, you sum it up, you remove it from the balance, which you can see, you must get the exact amount in your bank statement. So it must align because you work the each back, you reconcile those need to be added and those who need to deduct. Those need to be added and those need to deduct. So if you reconcile it, it must balance with your bank statement. It must balance with your bank statement. So if it does not balance, then there's something you feel omitted. That's method one. That is when you are working from your cash book, you work it down straight to your bank statement. And method two is just the reverse. So if you are working from your bank statement, you can work back down to cash book. So it's just what opposite of it. The ones you had, you left. The ones you left, you had. In the first instance, the first method, you can see had unprecedented check, had dividend, had credit transfer. But in the second method, what do? You left unprecedented check, dividend, and credit transfer. So it's just vice versa. It's just vice versa. So we are going to look at the question with respect to this. There's a question, we will look at it. Let me try and look for a question so we can quickly do. After that, we'll look at, I hope some of us have, if not all of us, our last week assignment. So we quickly look into it before we go on to the break. We all look at that together. We look at that together. So before we go on our break. So let's look at the question. Let me see if I can get the question before we move to the discussion. So, let me share. Just give me a few seconds. We'll look for it. Okay. I hope you can see my screen.
Hello.
I hope you can see my screen.
Yes, you can see your screen. Bank
Yes.
reconciling statements, illustration
Okay,
1.
good. Okay, good, good, good. So let's look at this. Let's look at this. So let's look at this first illustration. On 31st of October 2024, your cash book showed a debit balance of 4,000 naira. I think your cash book, your own cash book. So what you have, or what you think you have in your account, not in your account rather, what you think you have in your purse or your recording that you know, I know I have this little amount is 4,000 naira. But you went to the bank and you printed out the bank statement and you discovered that the bank statement is showing 4,270. So there's a difference of 270. So because you were thinking I should be having 4,000 naira in my account now, based on the record I've been making, my cash book record, I should be having 4,000. But I discovered that when you print out the bank statement, you discover that you have 4,270. So on comparison, the following were found. The following were found. Check you issued amounting to 2,500 naira had not been presented for payment. Check you issued amounting to, can you see? You issued it, but had not been presented for payment. So what do we call that? From the tag box, what do we call that? Oh, okay. Can bank draft affect bank? Yes, obviously, it can affect it. It can affect it. Bank draft can affect it. In as much as there's a transaction that already occurred in your bank statement, it can affect it. So looking at this, what do we call this one? From the tag box, the check issued amounting to 2,500 had not been presented. What do we call it? Let me share this again so that maybe you don't have all this on the top of your head. So let me share this again. So see all these things: unpresented check, uncredited check, dividend, credit transfer, donor check, bank charge, standing order. Please put this in your memory now. So as I'm asking those questions, just tell me what is it? Is it unpresented check? Is it uncredited check? Is it credit transfer? Is it this and that? So that is what I want to hear. That is what I want to hear. So let me go back to the question. Let me go back to the question again. Let me go back to the question. So here is the question again. So you said Richard balance as a cash. No. We already know balance as a cash. The balance as a, you can see on 31st October 2024, your cash book, that's your balance as a cash, is 4,000 naira. You already know that. But you're also thinking that that's what you should have in your bank statement. It must correspond. All of us, we know how much we have in our bank. At least you have idea of how much you have in your bank. Right now, you should know how much you have in your bank account now. But once fortunately you now log into your app and you now discover that it's not the same amount you have. What you think you have is not the same amount. So what could have resulted into it? These are the A, B, C, D, E, F that we're talking about. A, B, C, D, E, F. So the first one says check your issues amounting to 2,500. 2,500 had not been presented for payment. So please, what is this? What kind of I don't know what you use to use. What will you say this on? Is it a credit transfer? Is it a dividend? Is it unpresented? Is it uncredited? What? Dun, 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 dun. What is it? Dun, dun. No one is talking. These are practical things, so we need to now start letting it interactive. So, what is it? It's always the time. This is unpresented check. No, it's not printed. I said, can you, so I said, so let's understand this. Let's know the difference between unpresented check and uncredited check. Unpresented check, unpresented check. That's for the word present. You issue the check to someone, and the person is yet to issue it. Person is yet to issue it. Let me go back to the lecture. So we know. So let's see the definition again. So on present check, these are checks released or you issued out, but which are yet to be presented to the bank for collection as at the reconciliation date. As the reconciliation date, that is, the check issues have been deducted from your own cash. That you are the owner of the check. You wrote it there. You wrote it there. Pay Tobiloba Aribatishe 10,000 naira, and you signed, and you gave Toby, take this one, take this check, go to the bank. They will pay it into your account. You already did that. From your own thinking, you know 10,000 is already out from your account. But Toby is yet to take it to present it at the counter. Is yet to present it at the counter. So, but you already have it in mind that 10,000 is not already that given to Toby, but Toby is yet to take it out. So it means that it will still be lying in your bank account. So what do? You had it back. You know, as well that you deducted it, that you know it is how. But when you destroy your bank statement, it's how. So Toby is there to take it to the bank. So you had it back to your account again. Okay, my money is still there. So that is unpresented check. Why the opposite of it is uncredited check? That is the check you receive from somebody else. You receive from somebody else. But you won't took it to the bank. So see the definition. These are checks which have been received and enter into, because you received it, you know, this person gave me this check of let's say monthly amount, 500,000 naira. Wow. So you know in your mind that yes, I now have 500,000 naira with me now. So I'm 500,000 naira richer. But the person didn't give you cash. The person gives you a check. So you have to take it to the bank for it to be transferred to your account. And lo and behold, you went to the bank, gave the cashier, the person at the counter, the person looked at it, collected it, stamped it, and everything. To you already have it. But it's not yet credited to your account. That's why it's uncredited. Your account needs to be credited of that 500,000. But at the time of reconciliation, the bank is yet to credit you. So see the difference. So let's understand the difference between unpresented. Presented check, you won't give the check, the person is yet to present it. Credit check is you receive the check, but the person, but the bank is yet to credit you. The bank is yet to credit you. So let's go back. Let's go back. Go back. Where are you? Oh, okay. So good. As I said, it's unpresented check. A check you issued, he said checks you issued amounting to so far have not been presented for payment. So the person has not been presented for payment. So what do you do? Since you issue it out, what do? You add it back to your cash book. So that means if you are doing the calculation now, you just write balance as per cash book based on the format I give. Balance as per cash book. This is not the what's our balance as per cash book? 4,000 naira. So check that was issued from you to you. You already moved it, but you discover that it's not been presented again. You add it back to your cash book. Then you're adding the 2,500 back. That's it. Then B, the bank rejected check amounting to 140. The bank rejected check amounting to 140. As you can see, yes, that's the honor check. Good. That's the honor check amounting to 140. So that's the honor check. Then see a customer, standing order of 700 naira for annual subscription was not taken into consideration. Standing order of 700 naira was not taken into consideration. You don't know, or it has been what it has now been removed. You don't know. So that is a standing order from the word standing order. And since you don't know, you do what? You let it. You let it. If you don't know, you have to let it from your account. It has been deducted as a transfer from somebody's account. So you let it. A customer, Larry, paid 170 naira directly into your account without any notice of you. Doesn't that look like a miracle money, even though it's owing you? Even though it's owing you, that almost look like a miracle money or thereabout. So it's owing you. So that is one direct transfer, credit transfer. So you can see. So since the money came in, what do? You had it. Your credit book because the money came in. The money that came in, you had it. But you don't know before, and the money came in, you had it to your credit book. So it's the part of those you had. Dividend. Sorry, bank charges of 160 naira were entered in the bank statement only. Were entered in the bank statement only. Obviously, if bank statement you see bank charges. So that's bank charges. So what do you do to the account? Your own cash book. Since the bank has removed it, you also left it from your cash book. The dividend of 250 was paid into the customer account. Yes, into the customer's account. Yes, Richard, thank you. That's dividend. Then the last one is what? Check for 1,250 were entered into your cash book and paid to the bank, but had not been cleared. So what we call this? What do we call this? What do we call G? What do we call G? What do we call G? Anyone?
Uncredited checks.
Thank you. Uncredited check. That's uncredited check. So now let's see the solution. Very simple.
Hello, sir. Can you hear me, sir? Your voice is breaking. Hello, Mr. Sam.
Everything. confidently. This is just what your bank reconciliation statement, October 20, it's at 1st October. So,
Sorry, Mr. Sam, can you hear me? Hello. Network has really been very challenging for us today. I'm sorry, but we're not in control of the network. Well, I hope it gets on back as soon as possible.
hello?
Hello, Mr. Sam, can you hear
Hello?
me?
Oh, I can hear you. So, thank you. Sorry, thank
Your
you.
network, your network was breaking.
Very, very breaking. I don't know what could have happened today. About something must have happened. I don't know if it's the federal government or state government
It's all,
or the spiritual.
it's fine, it's fine. I think we just pick up from the previous slide.
Okay. I guess I was at the solution, trying to look at the solutions now. So yes, the solution. They say you are required to prepare a bank statement for the month of October. Prepare a bank statement for the month of October. So hold on. One, two, three, four, five. So balance as per cash book, which we talked about, 4,000 naira.
We can see your screen, sir.
Oh, okay, sorry.
Sorry,
Let
sir,
me
we
see.
can't see us. You
All
have
right. I
to
just
share again.
yes. Anytime I'm being logged out, I need to share and share. Give me 2 minutes.
I just see your updates.
Yeah, yeah. Hey, all right. So bank reconciliation statement as at 31st October 2024. So what we discussed. The balance as per cash book, which you can see on the top here, that says that your cash book shows a balance of 4,000 naira. So we want to work it back to make sure that we now get our balance as per bank statement, 4,200, 4,270. So our balance as per cash book was 4,000 naira. So you can see balance as per cash book, 4,000 naira. And after adding, what are the things we need to add? As we have said, the check that you issued out, you issued the check to someone, to Toby, but Toby, because you issued the check to you know 2005. Oh, network again. Oh, I don't know what to do with this network. I hope you can hear me. I hope you can still hear me. I
Yes, we
hope you can
can
still
hear
hear me.
you.
Okay.
Yeah,
All
we
right.
can hear you, sir.
All right. Thank you. So you now start adding back all what you thought was you removed or you didn't even add to your cash book before. You don't know that came in. You now start adding back. And what are they? The unprecedented check, the check that you issued out to Toby, or you take for your wedding gift. Take, you use the check to him. And to you, you've already removed it from your own mind that 2005 is going to be deducted from my bank account. But Toby is yet to take it to the bank to cash the money. And you already deducted it from your own that thinking you're already taking it. So because of that, you had it back. And when you check your bank statement, say, Toby is yet presented it. So add the 2005 back. That's why I have an unprecedented check. Add it back. Boom. That's why it's there. Credit transfer. Somebody paid you money. You never knew until it's off your bank statement, but you never have record in your cash book. You do what? You had it back to 170, which we talked about too. Dividend too, your shares, the company paid you 170. What do you do too? You had it back. So you know all those things you had back because you are now reconciling. Reconciling all, so you get your total 6,920. Then, after less, the dishonored check. The check that was dishonored, you left it. Standing order that you don't know that it has been removed. You are the one who gave the standing order, but you never knew the standing order has been ordered and you didn't put it in your own. Oh, manual subscription of this also, they deducted it already. So you remove it. So you remove it. That's why I find that remove. Bank charges too, you remove also. Uncredited check also.
Hello, can you hear me, Mr. Sam? Hello, Mr. Sam, can you hear me? I can't hear you.
So
Hello, Mr. Sam, can you hear me?
because the bank is yet to now get the balance in your bank statement. Yes, I can. Yeah, hello.
Yeah,
Oh,
I can hear
all
you
right.
now.
Sorry. Hi.
The network has really been
Okay. All right.
hectic
Let me
today.
share again. Ah, network is really frustrating. Seriously, really frustrating. Okay. So we have to check. I think that.
Your line is breaking. Your line is actually breaking. We can't hear you, and you might have to backtrack a bit because we lost you for some few minutes.
Okay. Okay. I hope it's better now.
Yes, we can hear you now. So you have to backtrack a bit.
Okay. Okay. All right. So, because I'm also in
Your line is still breaking.
so that we can able to maximize the little time we have. So, let me start again from the solution.
Your line is still breaking. Damola, is it breaking from your end?
Yes, it is breaking from my end.
Okay. Sam, your line is breaking.
Because of those, the network.
Hello, Sam, can you hear me?
I can hear you. Can you hear me?
Yes, but your line is not smooth. Your connection is not smooth. It's breaking.
Oh, good.
I actually have a suggestion.
Okay.
Probably if you can toggle your internet, if there is a possibility for you to probably switch it during the break, because we'll be having a break in
Yes.
like next few.
Yes. Good. This is even I'm not only changing that, I'm even changing location too, just to ensure that everything works perfectly. So
You can actually, if you want to switch your connection, you can do it now. I guess it won't take up to 2 minutes. So we can actually get a smooth connection while you're taking these examples or exercise.
so I'll be doing that simultaneously too. But immediately you didn't hear me, just quickly call my attention also. Maybe you don't hear me, just call my attention.
Okay.
So all right. So as I was saying, from the question, we've already been given the balance we have as per. We already have the balance we have as per cash book, which is 4,000 naira. So we have the balance of our cash book, which you can see here, 4,000. We start working back because we want to work back, make sure that we get back our bank statement, which is the balance as our bank statement, which is 4,270. We need to work back and everything. So what are the discrepancies? What resulted into not having the same 4,000 naira? So we have our presented check. So because of the presented check, you gave somebody a check, but yet to present it to the bank. But to you, you've already removed it during the month. But at the end of the month, you discover that the person has not gone to the bank to withdraw that money. The person has not gone to the bank is yet to debit you. So you had it back. That's why you can see it's add back. So the money is still with you. The money is still with you. You remove it before, had it back. Credit transfer. Somebody paid cash to you. Somebody paid money to your bank. You never knew how it happened. Your uncle paid money to your account. So what do? You had it back in your bank cash book too. That yes, you got the money. Dividend also too. So check to based on your shares you had that one too back also too. You had it. Then what do you left? The For example, so you left your dishonor check, the check that was being dishonored because it was already in your bank before. So because it was already in your bank before because you thought you already got it. How will I even explain it? Because you already issued the bank out. Sorry, you already so it was now dishonored. So you left it. Standing order. The standing order that you give to the bank. You never knew that the bank, you never recorded it from your own. So I'm trying to just change my so that it get me distracted a little bit. So you made the standing order, but you never in your own cash book. Then what happens? When you get your bank statement, discover that it has been removed, it has been deducted from bank. So what do? You also deduct it from your cash book. That's why you have it as less. Bank statement, bank charges also, which has already been deducted from your money at the bank. So you also remove it from your cash book. Then uncredited check too, that you already added to your cash book, but it's yet to reflect in your bank statement. So what do? You let it because you added it before, you let it. So at the end of the day, at the end of the month, at the end of 31st October 2024, you must get the bank statement. You must get the bank balance. The balance in your bank statement, which is 4,200 naira, as you have seen. 4,200 naira that you have seen. There's another second illustration here, but I'm looking at the time. Okay, let's look at this second illustration. Let's quickly look at this second illustration. So on the 31st December 2023, the cash book, as you can see, the cash book of a trader showed a balance of 4,780. You already have the cash book, the balance you have, 4,780, while its bank statement shows 5,540. It was discovered that the following transactions were responsible.
Hello, sir. Your network is breaking. Hello, can you hear me?
Okay. Okay.
Mr. Sam,
I
can
can
you
hear
hear
you.
me? Okay.
I can
Your
hear you.
network was breaking earlier, so
I can hear you.
kindly refresh us so it will be a little bit better to understand it.
Okay.
Hello. Okay. I guess the network has been a little bit challenging, so let's give Mr. Sam a few minutes. Okay, he's back on the call with us.
Hello.
Hello, sir. We
Uh,
can hear you.
yeah. Yes, so just a few minutes to go, everything will be fine after the break. I can assure you that. After the break, I can assure you that it will work fine. So back to the second illustration. Let's quickly do it, then we can go on a break so I can adjust. So on 31st December 2023, the cash book of a trader is 4,780. That's the cash book balance. That's the cash book balance as at 31st December. While his bank statement, when he now printed the bank statement, discovered that what he has in the bank statement is 5,540. It was discovered that the following transactions were responsible for his discrepancy between the two balances. One, check issued amounting to 770 have not been presented for payment. So what do we call that? Check.
Unpresented.
Good. Unpresented check. Then 3, B, as you can see, is obvious already.
Uncredited.
Good. Then C,
Standing order.
standing out. If you are not true. Then D, bank charges.
Bank charges.
Then E, dividend.
Dividend.
We do D and oh God, screenshot will have been better. You just screenshot how you do your working. But so,
Hello, Mr. Sam.
uh,
Hello, can you hear me? Hello, Mr. Sam, can you hear me?
hello.
Hello, Mr. Sam, can you hear me? Hello, Mr. Sam, are you with us here? Hello, everyone. So we'll use this moment to take a break. We'll take a 30 minutes break. We'll be back, and by the time we're back from the break, the network issue would have been resolved to a better state. So I believe everybody should just take a rest for 30 minutes, and the class will be in session back in the next 30 minutes. That's for 12:30. All right, thank you very much. We'll be expecting you to join the class soon.
Hello, can you hear me?
Yes, Sam,
Hello?
we can hear you,
Okay.
but we've gone on break.
Okay, all right. All
So
right.
we'll be back
So,
by 12:30.
all right. Thank you so much. Thank you so
All
much.
right.
I guess this time around will be better this time around. Thank you so much.
All
We can
right.
meet by 12.